Hello. In the last week, Indian indices managed to witness buying interest and supports are slightly shifting higher. Nifty index took support at 10,880, 10,950 zone and headed towards 11,080, while Bank Nifty also managed to surpass its hurdle of 27,250 and headed towards 28,100 kind of levels. Technically, Bank Nifty has surpassed its falling supply trend line and supports are gradually shifting higher. But we have multiple hurdles in both the indices and it has to surpass and hold above the same to get the decisive market momentum. Looking at the fundamental point of view, during the weekend, Finance Minister Nirmala Sitharaman came out with steps for the economic growth, but market is not taken in a surprising way, and that's why the follow-up is missing in the market. The negative trigger came because of the geopolitical concerns, as drone attack happened in the Saudi Arabia's Aramco's production unit, and because of that crude oil price spiked. So a couple of these factors are keeping the volatile swings in the market. But again, stock specific action is clearly visible in the market. Entire focus for the week will be on buying interest in heavyweights, FIs flow, contribution from DIs and geopolitical concern, along with any comment from the Indian government or finance minister. Now technically speaking, the Nifty has been finding support near to 10,950 zone from last 2-3 trading session. So now till it holds above the same, we are expecting it to head to us next hurdle of 11,111, 11,141. Index is also forming an inverse head and shoulder pattern on the daily scale, but for that it needs to surpass 11,141, then only the price pattern will complete to head to us 11,333. So as of now, those who are holding the long position continue to be with support of 10,950 for an upside. Immediate targets of 11,141 and above that fresh leg of rally cannot be ruled out. Talking about Bank Nifty, the support comes near to 27,500 zone. Until it holds above the same, Bank Nifty has potential to revisit or surpass the hurdle of 28,350, 28,500 zone. Stock specific, most of the FMCG counter are likely to be in focus and sustained buying interest is clearly visible there. However, some sort of recovery was seen in the auto counter, but again follow-up is required there. Talking about the derivatives data, the maximum put OI concentration is shifting at 10,800, call OI at 11,200. So that data indicates that we are likely to be in a range of 10,800, 850 to 11,200 level. So broader market outlook could remain positive to range bound with limited upside as well as the downside, because the volatility index itself has corrected from 18.3 to 14 level. So lower volatility indicates that limited downside and stability in the market, but multiple hurdle and the call writing indicates limited upside in the market. So by using the same, one can go with buy on decline strategy by putting the key levels, and better to focus on the stock specific activity in the market. Thanks, have a great week.